I'm Dennis McGowan, Vice President of Professional Practice at the Center for Audit Quality. I'm thrilled to be joined by a terrific lineup of guests on this afternoon's webcast. Some familiar, some new, some very first-time guests. So first up, Christine Gunia, Director of the Division of Registrations and Inspections at the PCAOB. Thank you for being here, Christine. Liz Gantnier, Regional Accounting and Auditing Director from Forvis Mazars. Welcome back, Liz. Another frequent guest on Audit Insider webcast, Mark Shannon, partner of SEC Regulatory Matters at Crow. Thank you for being here, Mark. Amy Pope, National Managing Partner of Regulatory and Practice Review at Grant Thornton. Welcome to Amy. And last, but certainly not least, my colleague Annette Schumacher, Senior Director of Professional Practice at the Center for Audit Quality. On today's episode, we're going to start with an update from Christine Gunia on some updates from the PCAOB from an inspections perspective. I'll then have a fireside chat with Christine without the fire, and then I'll turn it over to Annette Schumacher to moderate a discussion with our guests from the audit firms. So with that, I'm going to turn it over to Christine. Thanks for being here.
Yes, and good afternoon. And thank you, Dennis. Thanks for having me on today's Audit Insider webcast. I'm glad to have this opportunity to talk about some of the work here at the Division of Registration and Inspections at the PCAOB. Before I begin, do know that the comments are provided in my official capacity at the PCAOB, and so the views I express here are my own and do not necessarily reflect the views of the board, any individual board member, or members of the staff. So since this is my first event with the CAQ, I thought I might start with a very brief opening about my position and what motivates me about my work. It was just about 1 year ago today, although I see on my screen might be frozen. So hopefully you can all hear me. If you could give me a thumbs up if you can, Dennis. Thank you. About 1 year ago that I took on the position, starting with acting director, followed by director in April of this year. And I've been with the PCAOB a little over 20 years now, having started as an inspector. Having a little computer issues here, so forgive me. From the beginning, day one, I have been both dedicated to and motivated by the PCAOB's mission and the many talented staff with whom I work to protect investors every day. As director of DRI, I am guided by the PCAOB board strategy and each of its 4 goals of modernizing our standards, enhancing our inspections, strengthening our enforcement, and improving our organizational effectiveness. And so while my work here at the Division of Registration and Inspection, my work and the work of our staff support each of these goals, I have, of course, spent the most amount of time focused on that second goal, which is enhancing inspections. There are many ways that we have enhanced, and importantly, that we continue to enhance our inspections. And so what I plan to touch on today throughout my remarks are some of the more recent ways we are enhancing inspections to drive improvements in audit quality. Before I get to that, I thought it would be helpful first just to provide a very couple of quick facts and figures about our registrations and our inspections. So very briefly, at the end of 2023, we had approximately 1,600 firms registered with the PCAOB, with over 850 of those firms located in more than 50 jurisdictions outside of the United States. And during 2023, we inspected 227 audit firms. We reviewed nearly 900 audit engagements in 37 jurisdictions around the world. So, as you may already be aware from following the PCAOB reporting and/or various other communications, audit quality, as measured by the results of our inspections, while showing some recent signs of improvement, is unfortunately not where it should be. And that's something that I take very seriously because the PCAOB's mission to protect investors largely hinges on improving audit quality. And so audit deficiency rates are unacceptably high, and firms must do better. And we here at the PCAOB are doing our part to drive audit quality improvements. I, for one, strongly believe that inspections are the number one way we drive improvements in audit quality, but they certainly are not the only way. The other ways we drive improvement in audit quality include, but are not limited to, some of these following. First, we regularly engage with firms, whether it be during the frequent meetings we have with leadership of the larger firms, or just by participating in the broker-dealer and small business forums that the PCAOB is hosting. This engagement, of course, is all in addition to interacting during our inspections, when inspectors are asking their questions, or when they're sharing information, such as insights or observations, or even good practices that they're seeing in their audit, in the reviews of audits that they perform. We also engage with firms during the 12-month period that follows the final inspection report if and when the firms are preparing plans to remediate quality control criticisms, if any, included in their inspection reports. And maybe just one more example of how we drive improvements for now. And this one I'm extra proud of the PCAOB staff for achieving. We recently increased the timeliness of and the transparency in reporting on our inspection results. I'm happy to say that thanks to ongoing efforts to speed the release of our inspection reports and to be more transparent, we posted reports for all 2023 annually inspected firms in August of this year. And that was months sooner than the time reports on those category or that category of firms had been released in prior years. Add to this, also in August, we published a new staff spotlight entitled Staff Update on 2023 Inspection Activities. This spotlight can be found on our website. And in addition to providing an overview of the results from our 2023 inspections altogether, amongst other things, the spotlight also includes several reminders and good practices that may be helpful to audit firms. Also, in terms of transparency, we published new charts on our website to illustrate much of the data from that reports. But it's also data that can be used for all firms because, among other things, it illustrates areas that require more attention by the auditors. And we continue to look for new and different ways to bring our insights and data to investors, audit committees, and other stakeholders. So now let me turn to the 2023 inspection results, followed by 2024 areas of inspection focus so that I can paint the current picture for you. As noted in our staff update spotlight, broadly speaking, overall deficiency rates continued to increase in the aggregate, with 46% of the audit engagements we reviewed during our 2023 inspections, excluding audits of brokers and dealers, but 46% having at least one Part 1A deficiency. And this is up from the 40% we noted in our 2022 inspections. However, looking at the 2023 results just a bit more closely does reveal some sign of improvement in terms of the leveling off of the Part 1A aggregate deficiency rates at the largest firms, being the US Big Four firms, in comparison to 2022. And while we tend to look at the 6 US affiliates of the global network firms, or the GNFs, together, a closer look at the 2023 results revealed that 2 of the firms are outliers in terms of having influenced the aggregate increase in the deficiencies. So it's meaningful that we consider these US Big Four results combined so we can see some of the improvements. Similarly, there are outliers driving up the deficiency rates among the US non-affiliate annually inspected firms, with some of these firms having deficiency rates of 80 to, in one case, 100%. However, other firms in this category had 2023 deficiency rates of close to 10%, which is another good sign. Maybe one more noteworthy improvement is the fact that certain of the US Big Four audit firms have Part 1A deficiency rates that show the nature as being a bit more isolated rather than similar or related. And this is important because it suggests that quality control criticisms are less likely to be present, which in turn, in and of itself, signals some improvement likely in the QC systems at those firms. And while these results are promising, it will be up to firms to ensure that any improvements in their QC systems in turn drive higher quality audit engagements, especially on a sustained basis. Further strengthening the firm's QC systems and implementing the PCAOB's new quality control standard that was recently approved by the SEC may help to reverse the trend in overall increasing rates of audit deficiencies that we've been seeing in the aggregate. Before I speak about our 2024 inspections, areas of focus, let me just spend a few minutes highlighting some of the other spotlights that we published during the last few months. And most of these primarily reflect, but not only, our 2023 inspection activities. But these were spotlights that were issued in 2024, in addition to the staff update one that I mentioned. But first, just a little bit of background. Our spotlight publications provide auditors with important information, and they highlight not only inspection findings or deficiencies, but also the good practices that we observe during our inspections. They also offer actionable recommendations and reminders for auditors. And I think most importantly, they draw from our inspection teams, who are, in essence, our boots on the ground. So we've published an increased number of spotlights this year. I chose 3 of them that I thought might be of particular interest to the group today. So let me briefly mention and cover 3 of them now. So the first one is the Bank Financial Reporting Audits Spotlight. And this spotlight provides a summary of our inspections of bank audits in recent years. And we believe this spotlight is important given certain disruptions in the banking industry over recent years. As detailed in the bank spotlight, amongst other things, we encourage firms to consider the potential risks to the financial statements of the banks they audit, including risks related to increased volatility in financial and commodity markets due to fluctuations in interest rates and inflationary trends. In certain bank audits we reviewed, we saw instances of engagement teams not revisiting their initial risk assessments performed earlier in those years under audit, or in the year under audit, as interest rates continued to rise. So there was not a sufficient or effective revisiting of that risk assessment throughout the year. In some cases, the interest rate volatility was documented as an operational or a business issue with no financial reporting or internal control over financial reporting considerations. As a result, we observed that some engagement teams did not identify in their audits certain risks of material misstatements, despite the change in bank-specific or macroeconomic conditions that indicated increased risk in certain audit areas. The next spotlight I will cover very briefly is the spotlight on inspection observations related to auditor independence. This spotlight addresses a critically important topic, not only for the PCAOB and audit firms, but for anyone who invests in a public company or uses the services of a broker-dealer. In 2023, as background, we began to perform procedures to review compliance with certain independence requirements on every audit engagement that we reviewed during the inspection of a firm. And prior to that time, our procedures in this area were generally limited to a sample of audits selected for review. So the independence spotlight shares observations from 3 inspection years, 2021, 2022, and 2023. And it covers various independence areas that we focused on, which included, but certainly were not limited to, audit committee pre-approval of services / the communication with the audit committee, independence representations, personal independence compliance testing, permissibility of non-audit and tax services, and indemnification clauses. And as I've said already before, our spotlights offer good practices. And independence is, that independence spotlight was no exception, because there we included some good practices that we observed at the firms regarding independence. And those include increasing the use of technology-based tools in the independence and independence compliance area. Also included enhancing the frequency of personal independence representations by firm personnel, and enhancing processes, for example, by including mandatory meetings with firm personnel who were skilled in independence matters, to guide firm professionals through their financial holding disclosures, and even those of close family members. All of this to ensure proper consideration is given to reporting all financial holdings. Another good practice is establishing disciplinary actions for personal independence policy violations, including but not limited to failure to timely complete frequent, whether it be semi-annual or quarterly, personal independence representations. And then finally, maybe one more good practice we observed was firms using templates with standardized language for all audit engagement letters for clients that were subject to SEC and PCAOB independence standards and rules. And lastly, let me cover one more spotlight document, and I encourage you to check them all out on our website, but this one in particular for our target team. In the spotlight entitled Observations from the Target Team's 2023 Inspections, which we published last month, you can read about the target team's deep dive into 3 different areas of focus during their 2023 procedures: crypto assets, multi-location audits, and significant or unusual events or transactions. Again, I encourage you to review our these spotlights that are all available on our website. Maybe before I turn my remarks to the current inspection cycle, I just want to mention one more thing that that I'm excited to talk about and proud of, something kind of new or different that we've done. And this is something that we kicked off at the end of 2023, but it continues to be an important focus into the current year, 2024, and that is our culture initiative. As part of this initiative, again, commencing in 2023, we performed procedures to further understand culture at certain audit firms, and in particular, wanting to understand how culture contributes to or detracts from audit quality. The idea for this focused effort stemmed from the continued identification of audit deficiencies across the 6 U.S. affiliate firms in the Global Network Firm Inspection Program, combined with increasing discussions with each of these firms about possible root causes and the role played by a firm's tone at the top and firm culture. While audit firm culture is touched upon in various inspection procedures, we wanted to dive deeper into it. So, like I said, starting towards the end of last year, we formed a dedicated team to identify and assess unique aspects of culture at each of the U.S. affiliates in the Global Network Firm Inspection Program. Our dedicated team performed over 100 interviews of personnel across those firms, and they collected and reviewed other materials that were provided by the firms that demonstrated examples or characteristics of that firm's culture. And again, one of the objectives was to try and understand how each firm's culture affects the ability of that firm to consistently perform high-quality audits. So that work continues, and we look forward to sharing our observations at the appropriate time. So let me move on to the current year inspection cycle. And I'm not going to go through all of our areas of focus, but let me just highlight a few. So in addition to focusing on areas with recurring audit deficiencies, during 2024, we've been considering overall business risks that might have been present during 2023 audits and how the auditors are considering those risks in their audit procedures throughout the year. A few of these risks, just as examples, include persistent high interest rates, tightening of credit availability or inflation, financial statement areas with a risk of fraud, estimates involving complex models or processes, and certainly the disclosures that may be impacted by all of these items. And of course, risks that require consideration related to rapidly changing technology. And these risks might include, those related to digital assets or even cybersecurity. Earlier, I mentioned our target team's 2023 activity. So I just want to circle back to them now that I'm telling you about our 2024 areas of focus. And I'll mention briefly about their 2024 areas of focus. I'll give you a quick snapshot of their topics and maybe a little bit of background on why they're focusing on them. And I'll start with the first topic, and that is first-year audits. Similar to when we inspect a firm for the first time, we've seen an uptick in deficiencies when we review first-year audits. Auditors face different challenges when auditing a company for a first time, and so it's helpful to understand how procedures are performed to address these challenges. And so in 2024, our target team has focused on these first-year audits. Another area of focus for them is risk assessment. As you are well aware, a comprehensive risk assessment allows auditors to tailor their audit procedures to address specific risks and to focus on areas that are susceptible to the material misstatement of the financial statements. An effective risk assessment not only enhances the efficiency of the audit, but also increases the likelihood of detecting material misstatements where they're caused by error or fraud. Another topic for the target team is artificial intelligence. With the rise in significant AI investments by major companies as a notable trend, certainly the increasing importance of AI in shaping business strategies and the like, it's important for us to understand the accounting behind these investments. And that in particular is a focus of our target team for this year. For example, they're evaluating how investments are identified and valued, how the auditor has addressed the company's consideration of the capitalization and recoverability of any software costs, and whether a specialist was used to assist with any estimates, valuation, and/or recoverability of capitalized assets. The next one up is biotech startups following initial public offerings. Sorry, I just got interrupted by the poll there. One significant risk that we're aware of and kind of wanting to focus on relates to the nature of just the biotech industry itself, where the success of a company is often tied to the outcomes of complex and lengthy research and development. And so this makes financial projections inherently uncertain, raises the possibility of misjudgments or misstatements in the financial statements. And so that's a little bit of the why that's a focus for our target team in 2024. I'm almost done. Just two other quick topics for our focus. For our target team's focus. Shared service centers, as the role of shared service center facilities in the execution of issuer audits continues to become an increasingly important element in firms' staffing models. The target team is continuing to review this topic. And then finally, cash flows, segment reporting, and earnings per share. Auditors must diligently audit financial statements and the disclosures to ensure they are accurate, complete, and comply with relevant standards. Failure to do so poses risks such as risks of misinterpretation, legal consequences, incomplete decision-making for stakeholders, and the like. So insufficient audit procedures over financial statements, including the cash flow statement, and disclosures like segment reporting and earnings per share can undermine the overall reliability and transparency of financial statements, and thus a focus of our target team for 2024. I do anticipate that we will report publicly on our 2024 target team findings as we've done in the past, but the year and their procedures are still underway. So look out perhaps for a future spotlight on that topic. So I know I've covered a lot of information in a short period of time. So I figured I would wrap up and kind of leave you with 3 takeaways before we perhaps dive into some questions. First, audit quality is a priority because that is the PCAOB's mission. Audit quality is essential to investor protection. And beyond just a priority, the entire PCAOB staff are working for ways to improve audit quality. Second, while 2023 results are showing some glimmers of hope, results are still not where they need to be, and audit firms must do better. Third, inspections are the #1 way the PCAOB helps improve audit quality, but they're not the only way. I've covered a number of different examples throughout my remarks, and my colleagues throughout the PCAOB in enforcement, in standards, they all play a big part of this objective, working together with us. To repeat what I said earlier, our focus in the Division of Registration and Inspections does try to do this by increasing transparency, by accelerating the release of our reports, by engaging with firms, big and small, especially during the remediation process, by conducting innovative ways like the culture initiative that I mentioned, and educating and getting our message out to the public and the profession through vehicles such as our spotlights. So I hope you found this information helpful. Happy to take your questions, Dennis, about the points I made or anything else regarding our work.
Yeah, thank you. Thank you, Christine. I think that that was a really helpful overview of the work that's underway in your division, and really liked what you shared. And I think this audience enjoys hearing from you and what your perspectives are. So I guess the first question I wanted to ask here was that, and I'm glad to hear that there's some improvements, right, that you're seeing with respect to inspection findings. And you did talk a little bit about how in the spotlights, you try to, oh no, did we lose Christine?
I'm sorry, Dennis, I'm back. I got kicked out there for a moment. Can you hear me okay?
Yeah, I can hear
Okay,
you. Can you
great,
hear
great.
me?
I apologize for that. My screen was frozen the whole time, so hopefully you all were able to hear and see appropriately.
Yes, we heard you the entire time. So,
Thank you.
so thank you for bearing with the technology. But so I first wanted to ask you, you talked a little bit about certain of the spotlights, right? Highlighting what are those good practices. You talked about even, risk assessment, how you observe that sometimes a real, proper risk assessment results in really well-designed procedures at the right, risks and material misstatement, whether due to error or fraud. So I thought I'd ask you first about, what are those things that you're seeing doing well that maybe you haven't already mentioned? And then certainly, where can you see firms improving?
Sure, and forgive me because my computer's spinning once again. So, but I did hear the question. So let's hope that my connection stays stable so I can answer it. And I'll start with where we think firms are doing a good job. Because there's a couple things I'd like to cover, but in the interest of time, if I had to pick maybe two, I'd say it's first, the firm's efforts to return to work after COVID. From what we're hearing, most firms are offering staff a mix of in-person and remote work options. And this mix is important to preserve flexibility, but also to ensure that the in-person and the on-the-job learning opportunities are there as well. So being physically present for an audit allows for direct interaction with senior colleagues, maybe easier or more immediate access to guidance, better observation of client operations, and really just facilitates a more immersive learning experience, especially when it comes to mentoring and knowledge sharing, amongst other things. I'd say second thing that we're seeing in terms of what's being done well might be what I'll describe as an approach to audits that encourages standardization, simplification, and or consistency. So simplified, centralized, and or standardized structures, processes, approaches, we're seeing may be a key to audit quality. And this includes removing the optionality that allowed auditors to choose or not choose, say, a firm tool or a template that was designed to ensure quality audits. And, after all, if something such as a tool or a policy is good for one audit, why is it not good for all? So audit firms with more centralization appear to have fewer deviations from their procedures, broadly speaking, and this could result in fewer Part 1A findings. Regarding the need for improvement, I would say remediation. Our process for remediation encourages a firm to remedy its quality control criticism and thereby drive sustainable improvements in quality. And we encourage all firms, large and small, to engage with us over their 1-year remediation period, preferably early. But unfortunately, however, not all firms take full advantage of this feedback, whether because they're engaging very late, and in some cases, they choose not to engage with us at all. But certainly, firms are not required to engage with us, but we strongly encourage and frequently remind firms to do so. And then I'd say my second item for improvement might be risk assessment. And I touched on this in my remarks, especially with the banking spotlight. Audit firms need to tailor their audits, which is in particularly important in times of changing economic conditions. Changes may have a significant or sudden impact on the firm's risk assessment and therefore the response. And so it's important that firms focus on risk assessment. And when I talk about risk assessment, or when I think about it as a way of working smarter, not necessarily working harder.
No, that's very helpful. You mentioned earlier in your remarks about investor protection being core to the PCAOB's mission. How do you think about investor needs when performing your inspections?
A couple different ways come to mind. So, for the PCAOB to fully execute our mandate to protect investors, we regularly consider throughout our inspection activities ways that we are taking into account the needs of investors. So, one example might be to as we've been recognizing the importance to investors of timely and transparent reporting. And you heard me mention this and give a shout out to the dedicated staff at the PCAOB who worked really hard to accelerate the release of our inspection reports. And we continue, right? We continue with our efforts to make sure that our reports remain timely, hoping we can even exceed, the goal we set for this year. So timely and transparent reporting is one way. I guess another way I would cite is, and this too I spoke about, is increasing the transparency of our results, including the enhancements that we've made to our website. So those include like the ease or improvements on how to search and filter and sort more than 3,700 at the last count inspection reports there, whether you want to look by the size or the type of the firm, whether it's annually or triennially inspected. Maybe you want to filter by inspection year or the Part 1 deficiency rate, the number of audits reviewed. We've made improvements to help users of our website being able to use that kind of information. And maybe the other one I'll mention for now is CAMs. CAMs are another way we incorporate investor interest into our work. So given that an auditor's communication of CAMs in the audit report is there to inform the investing public about certain matters arising in the financial statement audit that were communicated or required to be communicated to the audit committee, amongst other things. We recognize the importance of all of that. And so CAMs are a focus of all of the audits we review on each of the inspections that we perform.
That's very helpful, Christine, and especially do applaud the PCAOB on the timeliness of reporting. So I think not just investors benefit from the timeliness of those reports. As somebody who follows those reports closely, I know we like seeing them earlier too, and I think the firms do as well. So really applaud your team for getting this year's reports out sooner, and look forward to 2024's coming out sooner too, hopefully. And then also CAMs is another area we at the CAQ have been focused on. That was actually the first comment letter I worked on when I got to the CAQ. And shameless plug for a survey we put out, I think it was last month, with some results of some investor perspectives on CAMs and some positive results in those survey results. So that was good. So my next question here, maybe not necessarily about anything you talked about, but luckily we planned this question ahead of time. But so certainly, the Office of the Chief Auditor has been quite busy. So I wanted to ask about how your division works with the Office of the Chief Auditor with respect to proposed standards or recently adopted standards.
Sure. No, that's absolutely a fair question. And I didn't have a chance to plug them in my remarks. So I'm happy to do so now because we work very closely together. Inspections and standard setting kind of go hand in hand. And inspections inform the PCAOB standard setting activities in many ways. So let me just share a couple of examples of how we work together. I'm going to come back to my reference to the DRI inspectors being our boots on the ground. And those inspectors, they provide observations about what we're seeing in the audits we're reviewing, for which maybe the standards as currently written may not be clear, or they just may not currently address the needs. So that's the type of observations we may report back or share with OCA. And then DRI inspectors are also involved in the review of drafts of proposed standards, and we give feedback to our standard setting colleagues on our reviews about whether these proposals may be quote unquote inspectable, and or whether the proposals, provide sufficient clarity. Just a couple of other ways, because together we might engage with firms, together being OCA and DRI staff may come together to engage with firms on certain standards or rules, both new and old. We work together to design inspection procedures that allow us to go out and assess firm compliance with new standards or rules. DRI is included in OCA-led training on new standards and in reviews of external guidance and implementation tools before OCA will publish them. We have a fairly thorough consultation process internally where inspectors are reaching out to OCA to ensure we're reaching appropriate conclusions in our work, especially as it relates to new or uncertain inspection observations. So we're wanting to get the views of our OCA colleagues as we develop our findings. And then I should certainly mention that we work very closely together, DRI and OCA, when we collaborate on those spotlight documents, including but not limited to the ones I mentioned throughout my remarks.
Sure, no, that's extremely helpful, Christine. So thank you. So certainly, and I think you mentioned this in your remarks too, inspections, it's no doubt that over the last 20 years, audit quality has improved, and inspections is a big piece of improving audit quality. And it's an important tool. But some might describe inspection findings as a lagging indicator, measuring past outcomes. And so, in your opinion, what are some of the leading indicators that maybe are predicting future performance of audit quality? And I think you touched on it a little bit when you were talking about looking at, some of the firms, findings maybe had less QC criticisms. And when you said that, I kind of in my head thought, okay, that's probably a good leading indicator that maybe a reduction there means that QC systems are working more effectively, and therefore could mean that there's less risk of deficiencies. But I just wanted to ask what your opinion is of leading indicators.
Well, you might be happy to know that we match on that first one, because the first one I was going to mention was a strong system of quality control at the firms. We saw following the pandemic, like with recovery from that audit firms with strong QC systems, including maybe centralized processes or structures that were in place before the start of the pandemic, they may have seemed to have a better chance of quote unquote weathering the storm and more quickly righting their ship as they were facing some challenges resulting from the pandemic. So strong QC systems for sure, that comes to my mind. Another one might be, and it kind of goes hand in hand, but with QC systems, and that's successful remediation. So I already mentioned when firms engage and take seriously the remediation process, they can strengthen their QC system and prevent the same deficiency from recurring year after year. But then maybe what also goes hand in hand with that, or those two things, is root cause analysis. When audit firms begin the remediation process, we strongly encourage or recommend they perform a root cause analysis. In some cases, there could be a number of causes contributing to a deficiency. But the more thoughtful and objective the root cause analysis, the more likely the firm will identify kind of those major causal factors and increase the likelihood that the firm can design and implement remedial actions to be effective in preventing the recurrence of similar deficiencies. In the interest of time, I'll just make one final kind of plug for root cause analysis. You know, a granular, maybe tailored root cause, especially in the area of recurring deficiencies, where the deficiencies recur and it's the same root cause, you know, it might be a chance to look and step back and say, okay, has the root cause even evolved? And what might be a better or more granular way to address root cause analysis? So those are probably the things I would suggest as the leading indicators. I was going to give maybe one more plug for a spotlight because I know we have one on root cause analysis. So if anyone's interested, you can find that on our website as well.
Great. Well, thank you so much, Christine. I think your remarks and our Q&A session here has been extremely helpful to our audiences. So thank you for joining us this afternoon, and hopefully we'll have you on another episode of Audit
Thank you.
Insider in the future. So thank you, Christine.
Thank you. Thanks, everyone.
And I'm now going to turn it over to Annette. Take it away, Annette.
Thank you, Dennis. We're right on time, which is great. We'll now turn our discussion over to our panelists of auditors who will share their perspectives. Liz, Mark, and Amy, thank you for being here. As we start, I'd like to kick it off with a question for each of you individually. Christine provided us with we've got a quick poll question here. Close out. Christine provided us with a great summary of things that her inspection teams have observed and areas of focus for the inspectors over at the PCAOB. What stood out to you as something you'll take with you throughout the 2024 audit season? Liz, I'll start with you.
Thanks, Annette. I was really intrigued by some of the conversation about initial audits and the importance at the onset of an engagement from acceptance through to issuing an opinion, how important those first couple of steps are going to be. Do you have a very robust QC environment that consistently manages the acceptance process and has a strong framework around what is acceptable and what isn't acceptable and why? I also think understanding the staffing requirements and the timing of those staffing requirements is going to lead to good quality or can lead to poor quality if you don't have that well in hand. Do you need subject matter experts? Do you need to hire an outside specialist? Are component auditors going to be required? Is there a unusual jurisdiction that you're not accustomed to working in and around? And have you overcome those challenges at the onset? So a lot of this dovetails nicely into all of the conversation about risk assessment, but it's that front end, you know, do I have a good plan in place? Because something is going to go a bit sideways. And if everything goes a bit sideways, you don't have any time left or bandwidth left to manage it. So you've got to have as good of a plan up front as possible. Do you understand the IT system? Do you understand what information is going to be provided by the entity? Do you have a game plan on how to manage those things? Lastly, I would say, do not be biased about what went before. So just because it was not a deficiency in the past doesn't mean it isn't a deficiency now. Just because the conclusion on the accounting reached a certain level of, yes, this is revenue and it's at a point in time, doesn't mean that was correct or doesn't mean that the facts have changed or evolved over time. So it's very easy to say, hey, that was audited by a great firm with a great reputation. And so let's just accept that all those conclusions are correct. You've got a second bite of the apple, a fresh look, and don't make sure your professional skepticism steps in and you re-audit and rethink and challenge what went before you. So I think day one, those initial audit engagements, really important to get them off on the right footing.
Thank you, Liz. Mark, how about you? What stood out to you?
Well, I think Liz Liz used the bingo card answer of risk assessment, and honestly, like when I was listening to what Christine was saying, I think you might have heard the words risk assessment 5 times if I was counting. I was trying to take marks over here. So Liz was number 6. I'm lucky number 7. I think, and I'm a big fan of risk assessment, even though I think risk assessment can be challenging when risks evolve over the course of the audit. And Christine like hit on this a little bit. But I think it's really one of the most important things to consider in all your audits because of the dynamic process of risk assessment and the dynamic process that risks just change over time. So if you thought about the remark that Christine made in the banking situation, risks evolved over the course of the audit. So if you think about your audit, it's a 1-year audit. You're doing procedures over the course of that year. Well, the things that you were doing 3 months ago might not be the things that you need to be thinking about today. And so you need to go back to that risk assessment. You need to redocument it. I think that's an important fact that you always have to think about. So I might have thought about a change in risk, but did I get that written down in my audit documentation? That seems like an important dotting the I, crossing the T, and really getting that thought process down. The other thing I think that's interesting is if you sort of twist that around a little bit, sometimes in a risk assessment process, you say, I've got this significant account or disclosure. In my initial risk assessment, I didn't think there were any risks of material misstatement. But as time goes on, maybe those new risks have evolved and those new risks have arisen. So you have to go back to even those things that you didn't think were risky at one point during the audit. You have to go back to those, figure out if those risks have evolved, reassess the risk, document your new risk assessment, and then most importantly for any of this process is to flow that down to those tailored audit procedures that Christine mentioned that can make your audit more effective as well as more efficient. And that risk assessment process goes all the way through to the date that you sign that audit opinion. So it's really iterative. It takes time to do it right, but that's something that I think all of us in the profession need to take away.
Thank you, Mark. So it sounds like being nimble is very important, right along on the way, keep continually assessing and reassessing, and then importantly, documenting things as if things change. Amy, what about you? What was your takeaway?
So I guess given my role in leading inspections, I maybe have a slightly different lens. What stuck out to me was less about audit execution and more about what I'll take with me as our firm closes out 2024 inspections and plans for the 2025 inspection season. Christine talked about remediation and the underlying importance of root cause analysis. Analyzing and digging into inspection deficiencies to find out what led to them is super interesting, to me anyway. If you dig deep enough and ask enough questions and truly get to the root of the negative inspection result, you can find a way to avoid repeating that same mistake in the future. Sometimes the root cause is obvious, sometimes it's complicated and has a lot of different layers, or it's a combination of things that really led to that result. I think most people think about root cause as it relates to why something went wrong. It's also super interesting to find out why something went right. What led to this specific positive result, and how can we replicate that across other engagements? So for that reason, I often find myself flipping to the good practices section of the spotlights first. I want to know what others are doing, compare and contrast that to what we do. Those good practices are sometimes born out of understanding root causes and implementing new actions that improve the system of quality control Christine talked about. So to answer your question, Annette, the good practices are always what stand out to me in the various spotlights in the PCAOB releases.
Thanks, Amy. I like to look at the best practices part of it in the spotlights. I think those are always very helpful as well. Liz, a question for you. Christine discussed the areas of focus for target team inspection activities in 2024. what's one area that you believe is particularly worthy of focus and that your teams will also kind of be paying attention to as we come upon 2025?
Well, I think we've hit on the big dogs, if you will, already through risk assessment and understanding yourself through root cause analysis. If I was going to add anything, I would say there's real attention on disclosures. There's real attention on, you can get the accounting right and not have told the correct story. And that is on the auditor side in CAMS, and that's on the client entity side in their disclosures. And so I find it interesting that we're still talking about cash flow statements and segment reporting and earnings per share, et cetera. You know, disclosure checklists and that are hundreds of pages long, extraordinarily detailed, extraordinarily complex. And the best of us is going to run out of steam looking through those disclosure checklists. But to take a fresh look and look at those disclosures and think outside the box on, have we told the entirety of the story? Have we told what matters? Is the right message coming through? Is it in sync with what's being said elsewhere in the document? For example, over in MD&A, for example, I think making sure that you're not just auditing the numbers, but auditing the story around those numbers, I think continues to be a priority.
You raise a good point about the importance of disclosures, and really that's what investors are looking at. It's a really important aspect of what to investors as well. So thank you for that. Mark, as you consider Christine's remarks, as well as kind of the various inspection reports that you've taken a look at the last few months, what are some areas of particular interest to auditors in 2024 audits?
So for me, the one thing that Christine said that resonated with me were the words recurring audit deficiencies. And when I hear that and I read inspection reports and I'm kind of keeping a mental tally in my head of like, well, what seems to pop up with relative frequency? Auditor use of data and reports is something that, and in fact, this was the subject of a spotlight document that we didn't talk about today, but on the PCAOB's website, you can find a spotlight document issued in April about auditor use of data and reports. It's all about how are auditors evaluating the relevance and the reliability of data that is coming out of those reports. How is it that we're evaluating the completeness and the accuracy of the data in those reports? And then also, do we understand the data flow and how those reports and data are being used throughout the data flow to really make those informed decisions about how do we need to audit those reports and how does that flow down to the financial statements as well as the disclosures themselves?
Thank you, Mark. That's definitely a very dynamic area. It seems like it changes as time passes very quickly. Amy, one last question for you. Christine described the various spotlights, and this is kind of back to, and spotlights has been a popular topic today. Christine talked about a number of the specific, a handful of them that were issued this fall by the PCAOB, which I think we've all found to be very helpful. How do you and your colleagues consider staff publications such as these when you plan and perform your audits?
So to start, we have a weekly announcement related to standards and guidance that is distributed to the entire audit practice, of course, to ensure everyone keeps informed of all these things as they're happening. We also have a process to evaluate those PCAOB announcements that may result in alerts we're putting out to the practice, updates to our manual, guidance, work programs, and also changes that we may need to incorporate into our annual trainings or core development trainings. And that's kind of all specific to the execution of our audits. That's my monitoring hat, but we also consider whether there are any necessary changes to our monitoring plans, right? So for example, is there a common inspection deficiency, like what Mark just mentioned, that we weren't aware of before, maybe we're not covering in our monitoring plans? We need to incorporate that into our inspection program. I imagine, Annette, my answer is probably pretty consistent to all the other firms and how they handle the staff publications.
I would imagine that, and everybody just seems to really appreciate this guidance from So we're grateful to the PCAOB staff for putting those out. Well, I think that we're coming up at the top of the hour, and that concludes our time together. I want to thank each one of you for sharing these insights and taking the time to be with us today. This has been a really great discussion, so thank you all for that. Dennis, I'll turn it over to you now as we wrap things up.
All right. Well, thank you, everybody. Really enjoyed the panel and Christine's remarks, and we will see you at our next Audit Insider. So thanks, everybody.